Hello dear students, welcome to Devika's Commerce and Management Academy. Auditing class introduction is over in the last class, okay? Now today we'll see very important topic in auditing, that is objects of auditing. In exam you can expect 90 to 95% this question. Objects means because this is the base of auditing. Actually what is auditing, what are their duties and what kind of object is to be required for auditing, everything in detail we are going to discuss in this topic. That is why it is important in auditing subject, right? So if you see what is the object of auditing means, generally you will see this, you will say that checking the transactions whether it is correctly written or not, and any kind of problems are there that can be checked, right? So, but if you see exactly what is auditing, the object of auditing means checking the transactions, all the transactions, and whether it is correctly, fairly, truly written properly or not. So, that everything we can say it as a auditing, okay. So, that is the main object of auditing. Now, if you see the objects of auditing, main objects and subsidiary objects. Main objects, just now as I told you, checking up the transactions, trading account, profit and loss account and balance sheet, whether prepared properly or not, accuracy of the accountancy, calculations, posting and properly maintained or not. So basic accounts they are checking it. So everything is going smoothly or not. That is, we can say it as a main objects. Main objects means everything is going smoothly and there is no mistake at all. Verifying the transactions, verification of the journal entries, verification of the ledger accounts and trial balance. Up to here you can say main objects, verification is over, right? Okay. Then subsidiary objects, second one is subsidiary objects. Subsidiary objects we can divide into many parts, okay. If you are able to remember this table in exam, it is easy, quite easy to write. Only remember this table and inside matter whatever explanation I am going to give you, that you can remember and you can just simply write, right? Anyway, it is useful for practical point of view also, not only examination point of view. Now let us discuss in depth about the subsidiary objects. Subsidiary objects are two types. First one is that detection and prevention of fraud and detection and prevention of errors. What is this detection and prevention of fraud? You must know the difference between fraud and error. Fraud means intentionally, deliberately to deceive someone. If you do anything, that is called as fraud. Fraud is intentionally, with a bad intention, with a bad thought, doing something deliberately, that is fraud. So this kind of frauds, detection and prevention of fraud. Then after that it comes to detection and prevention of errors. What is error? Error means mistake, by mistake. Not deliberately, not intentionally, he did not do anything, but he does not have the proper knowledge, or by mistake something happened. So that is, we call it as a error. Are you getting the difference between fraud and error? Fraud is intentional, deliberately something has done to deceive the other person, okay. So with a bad intention, when something is prepared, that is fraud. But error means simply by mistake or unknowingly and with half knowledge, if something happened, then that is called as a error. Now let us focus first subsidiary books. First one is that detection and prevention of fraud. Fraud is, you understood. Now this detection, different kinds of frauds are there here. What kind of frauds means? The first one is that misappropriation of cash. Cash is misappropriated, misused this cash. How? Suppose many transactions you can take. If you have done accountancy, financial accounting properly, the basic accounts like preparing journal entries, ledgers, trial balance, trading profit and loss account, balance sheet, and especially rectification of errors. It is very much related to this topic. If you have grip over these topics, whatever I have mentioned, then you can understand everything in detail. You can go ahead, hours together we can speak on this topic. But anyway, I'll give you an idea. I'm not going much in depth, 1 hour 2 hour lecture, no, right? Okay, misappropriation of cash means the cash is misappropriating. How we can misappropriate cash? Example will take, say I have purchased goods for the worth of 1 lakh, but I am writing in the books as 80,000. Actually purchased for 1 lakh but writing in the book as 80,000, means 20,000 is misappropriation of cash. Okay, or another example we can take, to the creditors the company has to pay 20,000 rupees. To the creditors company has to pay 20,000 rupees. So that is written in the books but exactly not paid. Not paid means this is misappropriation of cash. Purchasing, selling, payment, receipt example we can take. Say I got 35,000 rupees from a debtor, 35,000 received. As an accountant I received 35,000. I have written in the book but that is not deposited, means that is misappropriation. Or in the book I have written it as 10,000 rupees, in fact 35, 10,000 I have written, whatever 25,000 it is going inside of my pocket. So that is misappropriation of cash. There are n number of examples you can take. Misappropriation of cash. Who's having the more opportunities? The accountant who is dealing with cash book, the accountant who is preparing journal entries, the accountant who is preparing ledger accounts, trial balance, and who is dealing with cash book. All these people are having more opportunities to do this misappropriation of cash. In the same way, another type of fraud is here, misappropriation of goods. Goods is misappropriated. I have purchased few goods. So out of these goods, few goods are entered in the book. The other goods are not entered. This is one kind of fraud. Second kind of fraud, like you can take a lot of frauds. You can just, if you think it, imagine this and you can get lot. Anyway, you have to read the textbook once. Now another type of misappropriation of goods you can say. Say a company has purchased goods. The quality is high quality. And being a stores manager or stores keeper, I have changed it. I have taken that high quality products to my business or to my home, and there I have kept low quality of products. Same products but low quality I have interchanged. This could be a kind of another misappropriation of goods. Entering it less or changing the goods, anything is possible. That is misappropriation of goods. In the same way, manipulation of accounts. Generally, if you see misappropriation of cash, misappropriation of goods, this can be done by the lower level people or clerical level people or lower level management. Those people can do this kind of things. But whereas manipulation of accounts, here highly qualified and high management, higher level management will be involved in manipulation of accounts. A huge amount, a huge large transactions, so they'll be manipulating. First of all, where they wanted to do the manipulation, everything, they just plan it roughly. Then after that, they take the accountant who's writing the transactions into their confidence. Then after that, they do such kind of manipulation of accounts. Example you can take, manipulation of accounts. Suppose say there is a accident in the godown. Accident in the godown. Goods actually destroyed are only 1 crore. 1 crore goods are destroyed. By manipulating the accounts, they can show it's happening. So they are showing it, goods are 2 crores goods are destroyed. Means the difference of 1 crore goods are manipulation of accounts, right? And another example you can take. Say the company's assets value is say 5 crores, but by manipulating the accounts they are showing it as 12 crores. By showing it as 12 crores, The company is taking loan of say 10 crores. Manipulation. Actual worth is 5 crores only. But they are showing it as 12 crores and taking loan of 10 crores. In future something is going to happen, the company becomes insolvent, they are unable to pay the amount, then automatically the person who have given loan or the financial institute who have given loan to this company, they will be in trouble. So that is very dangerous, manipulation of accounts. Are you getting it? Fraud, detection and prevention of fraud, 3 types. Misappropriation of cash, misappropriation of goods and manipulation of accounts. Am I clear? Then if you are clear with this detection and prevention of fraud, then we'll go for detection and prevention of errors. Okay? Detection and prevention of errors. You know that error means by mistake. What type of mistakes are there? What type of errors are there? We have studied already in the rectification of errors. 5 types of errors are there. Rectification of errors, financial accounting, beginning chapter. You have to recollect it, easy. 5 types of errors are there. What type of errors? First one is that errors of principle. When principles of accounting like bookkeeping, principles of accounting like double entry system or following the journal entries, ledger accounts, these basic principles, if the accountant is not following, if the accountant made some mistakes at principle level, means basic principles of accounting, then it is called as error of principle. Means at root level only there is a mistake automatically, and that affects in the future accounts. That is why this is we call it as a errors of principle. Okay. Next one, errors of omission. Errors of omission means a transaction which is omitted. A transaction which is totally omitted. Say for example, we have purchased goods. We have purchased goods of 5,000 rupees. 5,000 rupees goods we have purchased it, but this transaction we forgot to enter. Not entered at all. Omitted. When this is omitted, that is error of omission. There may be a lot of transactions like that because the companies are very huge companies, right? In the same way, next one, errors of commission. Errors of commission means entry is partially written, partially written, partially omitted, or otherwise partially written wrong. So any of such cases we can say it as errors of commission. Partially that mistake happened. So then errors of commission. Say for example, I have received amount from XYZ debtors. Debtors are XYZ. From these people, I have received an amount of say 1 lakh, 2 lakh and 3 lakh. Here I am taking the example of error of commission. Okay. So for 3 members I have received from these debtors, I have received 1, 2, 3 means 6 lakh I have received. I forgot to enter this Z amount. Z debtors amount I forgot. But these two entered. Means 3 lakh entered, 3 lakh I forgot. Then that is errors of commission. Errors of partially entered, but partially it is ignored or by mistake it has forgot. Then it is errors of commission. In the same way, errors of duplication. Errors of duplication means double time it has entered, duplicate entry. I got 6 lakh rupees, say for example, 6 lakh rupees I got it. What I have to do? I have to write it on the debit side of cash book, written debit side. By mistake once again writing on the debit side, then that is called as errors of duplication. Errors of duplication is very difficult to find out. And another important and very conflicted and very complicated error is that compensating errors. Compensating error means one mistake is covered by another mistake. There is one mistake, but it is covered by another mistake. It is very difficult to find out such kind of mistakes. Suppose say we got an amount of 1 lakh rupees, 1 lakh rupee, okay. So instead of 1 lakh rupee, I have written here 2 lakh rupees. Instead of 1 lakh, I have written 1 lakh, 2 lakh rupees. Means there is a mistake of 1 lakh rupee. 1 lakh I have to write, I have written 2 lakh. Okay. So extra 1 lakh. And on the credit side, I am supposed to write 1 lakh rupees entry, but I did not write. Are you getting it? Here 1 lakh I have to write, but by mistake I have written 2 lakh. It should be actually 1 lakh only. By mistake I have written 2 lakh. And this is not, so extra 1 lakh. And on the credit side 1 lakh I am supposed to write, I did not write. This is not entered. Means here 1 lakh did not write, extra written, and here also, here they did not write at all. So one mistake is covered by another mistake. Any time when you do any kind of mistakes, that is compensated with another mistake, especially in trial balance, it happens. Debit side you have to write some amount, you did not write, and credit side also same amount you did not write. Means both the sides you did not write. Debit side entry we did not write, credit side also not written. Then automatically it will tally, trial balance will tally. It doesn't show any difference. It means this is error of compensating error. Very difficult to find out. Now anyway, we have discussed only types of errors and types of frauds, right? The main object of the auditing is main object is, we know that, checking the transactions and saying that accuracy of the accountancy, all the transactions are true and fair as per the knowledge of the auditor. So that is the main object. Now when it comes to subsidiary objects, detection and prevention of frauds, detection and prevention of errors. So, and here also we have discussed frauds, 3 types of frauds and 5 types of errors. All these things we have discussed, but how to detect it? For this, auditor need to have a depth knowledge, and he has to implement and he has to use his sense, and he must have the presence of mind to detect such kind of errors or frauds. Very difficult, and he has to be very careful. Unless he is having the fundamental knowledge very clearly, and while checking the transactions he has to take the evidences, proofs, and wherever he is getting a doubt he has to consult the client or the relevant accountant. Then according to that he can just find out what is true and what is wrong. In that way he can go ahead. And you know that auditor will be appointing many people, those who are doing CA, okay. So, and for them also he will be training all these things, okay, right. So in that way he has to be very careful while finding out the errors or frauds. That's all. So basic topic this is, an important topic also. Take the screenshot or note down. Able to remember? Very important topic. Objects are 2 types of objects, main objects and subsidiary objects. Subsidiary objects are 2 types once again. So detection and prevention of frauds, detection and prevention of errors. Frauds are 3 types: misappropriation of cash, misappropriation of goods, and manipulation of accounts. And errors, 5 types of errors. That is errors of principal, errors of omission, errors of commission, errors of duplication, and compensating errors. That's all. So objects, very important topic we have covered. And check out the playlist, many subjects already covered. Whatever may be your syllabus, definitely our channel will be useful, and don't forget to share these videos. Please share with many people and also let them to utilize it. Our main motto is to make studies are easy. There is nothing is difficult, right? So stay connected. See you in the next class with another interesting topic. Till that period, practice well. Study daily. Before exams, revise it. Good luck.